JP, good to see you, brother. How you doing? Evening. The first one in today. Evening, Miles. Autistic, good to see you. How you doing? Comatose, good to see you. How you doing? Stormy, good to see you. How you doing? T, good to see you as well. How you doing? There's still some issues with restreaming X. So the live show doesn't come up on X, but it kind of does. You have to click on my head, my profile essentially picture, and then you should be able to see the live show. Or if somebody posts this inside a Telegram group. Or if you're on YouTube, you can easily see it as well. Good evening, CMF Miles. All good to see you. How you doing? How you been? Okay, let's do intro disclaimer. What we're going to go through on tonight's live, and then by that time, everyone should be tuned in for the first part of the live show. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday, Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrency, CBDCs, AI politics, and regulations. Pretty much all the information you should know about regarding the world completely transforming into a digital space. The disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And we also do Q&As on this live as well, which means that if you do have any questions, put it down inside the comment section. More than happy to help you out. Now, this is episode 440 of the CMF live show. Everyone's watching right now. If you are on X, if you can kindly please, CMF members, at the top of the live show, there should be some sort of three dots. If you click the three dots, just like yesterday, and click share the profile, so at least that way we can get the live show out on X if you're watching this on X right now, because it still doesn't come up. There's still some issues going on with Restream being able to connect to X or X being able to connect to Restream for the time being. There's some maintenance going on apparently still. So if you can, CMF members, click the three dots at the top and click share to profile and just share it to your profile on X, and that way we can share the live show. Now, on tonight's live, we're going to be talking about Standard Chartered Bank's newest essentially perspective on the crypto market space. We're going to go through some news on tonight's live show also regarding the Crypto APAC group, which is a group of essentially crypto companies that fund this particular essentially package, which then they release that fund into politics to get crypto favorable regulations in place for us. We're also going to talk about on tonight's live regarding the Senate, regarding the SEC and crypto regulations. We're going to go through news on tonight's live show regarding essentially Hong Kong, as we just did yesterday as well. There's a bit more information coming out from other CEO perspectives from the Asian market space regarding the crypto sector. We're going to talk about Kathy Woods on tonight's live show as well. We're also going to go through news regarding the United Kingdom on tonight's live as well, regarding the crypto space. We're going to go through some BRICS news, which we haven't done for a long time. We're going to talk about Russia and India, the two biggest members inside of BRICS on tonight's live. And obviously, as always, we're going to be covering some Ripple and XRP news as always, as we do. But the first news we are going to go through is regarding Standard Chartered Bank's newest perspective of what's going to happen first, as how they see it, and then what's going to happen next inside the crypto space. Before we go through that, let's go inside the comment section first. Let's see what's happening there, and then we'll be straight into the first news. So let's see where we're at inside the comment section. We were here. Good evening, Miles and CMF. Manny, good to see you. How you doing? It's Denise. Not sure why my name has changed. I don't know either. But good to see you, Denise. How you doing? Morning, Miles and CMF. Shelly, good to see you all morning. How you doing? Good evening, Miles and all CMF. Addy, good to see you all. How you doing? Hi, Miles and everyone. One love. Good to see you all. How you doing? How you been? Good evening, Miles and CMF. Free Fabric, good to see you. How you doing? How you been? Hey, Miles, is AVAX and Ondo long-term hold? I would say so, yeah. Ondo is doing incredible work, I would have to say, inside the tokenization space. You know, the impact Ondo has in the tokenization space is huge, in my opinion, and it's only going to get bigger as they go along. AVAX is also a great project, in my opinion, as well. And it definitely is a long-term project without a doubt. What up, Miles and CMF? Yes, still a bit buggy on X for some reason. Yeah, I don't know why. I mean, there's that issue going on, you know, Restream and X being able to connect to each other for the time being. Evening, Miles and everyone. Joe, good to see you. How you doing? Hello, Miles. MD, how you doing? How's things? Even Miles and CMF, Jason, good to see you. How you doing? How's things? Also, on a sub note, I have launched a Substack. Essentially, if anybody wants to go and check a Substack, essentially, if anybody wants to go and check it out, I've essentially pinned the Substack essentially on my X profile. If anybody wants to go and check it out and subscribe to me on Substack, it is the number one essentially platform for reading material, you could say, compared to other platforms that are more video content work. So, I'm going to be posting a lot of articles on Substacks. And also, as I always do, give my perspective of what it actually means and, essentially what's going to be happening and so on. So if you want breakdowns of articles that I cover on this live show and essentially that I don't cover on this live show, and you just want to, broader idea of what's happening, go and check out my Substack. I've pinned it on X. If you haven't already, follow to it, essentially subscribe to it, do whatever you want, like and retweet as we'll go along. Now, let's go through the first news on tonight's live show, which is regarding essentially Standard Chartered Bank's newest warning, you could say, towards the crypto market space of what's to happen first and then what's to happen next. So here it is. Standard Chartered Bank essentially warns of deeper corrections inside the market space before we see an upside. Bitcoin to $50,000 and Ethereum to $1,400, and then we could see that upside happening. In a sharp departure from the prevailing essentially bullishness of other Wall Street giants right now inside the market space, as we talked about yesterday, regarding essentially JP Morgan, BlackRock, Franklin Templeton, Swift, and so on, all suggesting that, we're going to be going towards the upside now. Standard Chartered has a different perspective, but similar in some sort of a way. Their perspective is first, we're going to see one more down, and then we're going to go for the bullishness. So, Standard Chartered issued a cautionary report today predicting a significant flush out is on the way before the next major leg up. The bank's analysts suggest that Bitcoin could slide to $50,000 and Ethereum could drop to essentially $1,400 near the term, essentially in the near term. The logic behind the bearish target from Standard Chartered Bank is the yield war fallout that's happening right now. Standard Chartered's analysts pointed to the ongoing yield wars at the White House between banks and crypto firms going back to back, deciding essentially that, crypto firms want yields on stablecoins and banks don't because there's a bank run situation that happens. They argue that if regulators essentially side with traditional banks to limit stablecoin interest rates, a massive amount of yield chasing liquidity could exit the ecosystem temporarily. Macro headwinds. The report cites that sticky inflation data and the recent $8.3 billion essentially Fed liquidity injection as a sign of underlying stress in the global financial plumbing. They believe essentially this will force institutional trades to delve into treating crypto as a liquidity bucket to cover their losses in other sectors. Technical mean essentially reversing. After the record-breaking inflows of 2025, the bank views a move to $50,000 and $1,400 essentially ETH as a necessary mean revision to shake out over-leveraged retail and institutional positions. So, is this a buy the dip opportunity? Crucially, Standard Chartered is not bearish on the long-term prospects of the asset class, so they're not bearish, going forward completely on the crypto space. Like JP Morgan, which remains bullish for the rest of the year, Standard Chartered views this potential essentially slide as a final entry point. Standard Chartered Bank is trying to tell everyone that if we see one more down inside the market space, expect after that one more down, complete essentially fireworks towards the upside. And that one more down, if we do see it, is essentially a final entry point. It is coming from Standard Chartered Bank's perspective. Year-end recovery. The bank maintains its year-end targets, suggesting essentially that once the deflationary chaos, as described by Cathie Woods, settles and the U.S. Clarity Act progresses in the Senate, the market will rebound aggressively. In other words, we get a Clarity Act, the crypto market space is going to rebound aggressively towards the upside. Institutional re-entry. They expect the $2 trillion essentially in Asian flows predicted by BlackRock, as I shared yesterday, to begin entering in the earliest once these lower, essentially more attractive price levels are reached. In other words, we reach those targets of $50,000 Bitcoin, $1,400 Ethereum. Expect even the Asian market space to be funding, essentially pouring liquidity into the crypto space. Contrasting views. This forecast sets up a dramatic battle of the banks. for the remainder of Q1 2026. So this isn't something that's, Central Bank is trying to say is going to, carry on to Q2 and Q3 where we see a downside of this happening. No, they're saying Q1, all of this is going to go down. And then, mid or end Q1, we're going to see that uprise happening in Q2 up, Q3 up, and so on and so on. Bulls, JP Morgan target $266,000 long term. Goldman Sachs accumulating $1.1 billion, as we discussed beforehand. And essentially, ARK Invest and cautious and slash bearish Standard Chartered Bank prediction of 25 to 30% near term corrections. For investors, the Standard Chartered report serves as a reminder that the path to utility era may be paved with significant volatility, especially as crypto becomes more deeply intertwined with the shifting tides of traditional financial systems. I said this to everyone about 2 years ago that once we get to the final stage of the market space, they're essentially going to put you through hell. In other words, you're going to be frustrated. I told everyone 2 years ago the last step before we go into utility is going to be frustration. And that's exactly what essentially Standard Chartered Bank's report is trying to say. The last stage is going to be frustration and then fireworks. So, moving on from Standard Chartered Bank's report to the Crypto Pack Fair Shake. Now, the Crypto Pack Fair Shake essentially is money that's built up from Ripple, Coinbase, Kraken, even Crypto.com. Crypto companies essentially coming together a long time ago, creating some sort of a political crypto package filled with liquidity to fund politicians who are in favor of crypto regulations, to create a pro-crypto Democratic and Republican Party inside the government, which is what we want to hear, which is what we want to love to essentially hear. Because right now, the Democratic Party and the Republican Party are still going head to head against the crypto space. Republicans are fighting for the crypto space because they have been funded quite a lot by the crypto share pack. Democratic Party is still against the crypto space, not the majority, but quite a lot of them are still. Now, reports from CoinDesk came out today that the block confirmed that the Fair Shake, essentially the Fair Shake, the crypto industry's largest super PAC, has launched a $1.5 million campaign to unseat veteran Congressman AI Green, or A Green essentially, in the upcoming Texas Democratic primary. The crypto PAC, with Coinbase, Ripple, Kraken, and so on, is spending $1.5 million in politics to remove a particular Democratic person because this person is incredibly against the crypto space or the AI space, when it's to do with technology. This man is in favor of keeping America behind forever. And that's why the crypto space is trying to spend $1.5 million to remove him from his seat, which I agree with 100% that this man should be removed from his seat. This move signals a significant escalation in the industry strategy to purge the US House of Lawmakers it deems resistant or hostile towards the digital asset innovation. So, key details of this campaign that's going on right now by crypto companies. The strict targeting of AI Green, who has represented Texas for the 9th district since 2005, is being targeted due to his consistent voting record against industry-backed legislations, most notably his opposition to the FIT21 Financial Innovation and Technology for the 21st Century Act. Fairshake views Green as a roadblock to the pro-growth regulatory framework that is essentially lobbying for 2026. Funding the opposition. The crypto companies through this share pack are essentially, through this fair share pack, are funding the opposition, the Republican person who's essentially going up against them. The pack's 1.5 million war chest is being deployed through a mix of television and digital advertising. While not always focusing directly on crypto, these ads often highlight a candidate's broader record to sway primary votes. This follows the successful primary focus playbook Fairshake used in 2024 to unseat other high-profile critics like Katie Porter, which has actually worked. The crypto pack has removed a lot of Democratic politicians who were against the crypto space in the past, and they're doing it again, which I love. Honestly, this is how you get regulations passed, by putting people who are pro-innovation in the United States rather than trying to keep America behind for some oddly reason. Industry muscle. The Fairshake enters the 2026 midterms with over $100 million in the bank, fueled by massive contributions from Ripple, Coinbase, and Anderson Howards. The group has essentially stated that it intends to protect its allies and aggressively challenged any anti-crypto, essentially, politicians, essentially regardless of party affiliation. So this could be a Democratic person who's against the crypto space or Republican person who's against the crypto space. It could be either party. If they are against the crypto space, then they need to be removed. Essentially, is what this pack is set up for. The primary playbook, by focusing on the Democratic primary in a safely blue district, essentially like Greens, Fairshake aims to replace a skeptic with a crypto native or more moderate Democrat who's willing to support stablecoins and market structure bills. Brilliant. Broader political context. So, February 2026, so far, the White House yield wars. This political, essentially offensive, concedes with the heated standoff between crypto firms and banks at the White House over stablecoin rewards. The industry is eager to seat more allies who can break the legislative deadlock on the Clarity Act. In other words, the crypto campaign that's going on right now, they're trying to fund not just removing Green from his position because he's very anti-crypto, but they're also trying to fund other politicians to get this Clarity Act passed as soon as possible. Texas's crypto dominance. Texas has become a global hub for Bitcoin mining and crypto innovation. Fairshake decision to target a Texas essentially incumbent suggests that they believe there is enough pro-crypto sentiments within the state's Democratic base to successfully challenge an established leader. A warning to others. Analysts view targeting essentially of Green as a shoot across the bow for other senior Democratic politicians as well. The message is very clear. Seniority will not protect incumbents from industry financials and might if they continue to oppose everything exchange and tokenization trends and currently sweeping Wall Street and DC. As the Texas primary approaches, the battle for the ninth district will closely be watched as the bellwether essentially for the crypto industry ability to reshape the political landscape in 2026. I think this is incredible. I think that the money that they're spending, $1.5 million to push the other Democratic candidate who is pro crypto, is honestly amazing. And that essentially they should continue what they're doing. Any politician, Democratic, Republican, Liberal, whoever it may be from the Green Party, if they are against the crypto space, then go against them, essentially, is what they're trying to do. I think is a brilliant idea, honestly. Politicians need to learn that they don't hold the final vote, that we do. Our voice matters when it comes to politics. If we are voting you in, we are voting you in favor of standing for us, not against us. So what they're doing is amazing, in my point of view, going against these politicians who are anti-crypto. Now, and also getting a lot of pro-innovative crypto people who are politics, who are essentially politicians, could really work out in our favor for the Clarity Act or any of the crypto regulations that are going to be passed later on. Now, Senate breakthrough is what we're going to talk about next on tonight's live regarding the Democratic essentially push for the crypto bill as the SEC warns of defeat. Before we talk about that, let's go to the comment section first. Let's see what's happening there and then straight into the next news on tonight's live. So let's see where we're at. Before we go through the next news, we were here. How's today, Miles and family? Lena, good to see how you doing. It's been good. Even Miles at CMF. Jason, good to see you. How you doing? Callie, good evening, Miles. How you doing? I'm doing great, Callie. Good to see you as well. How you doing? They should get rid of Pocahontas as well. I agree 100%. Pocahontas, I mean, she's been there for way too long. They should get, in your opinion, Miles, you think it will be this month when the markets dump or March? They're suggesting quarter one. In my opinion, I would say quarter one because it's going to be a very coordinated dump. It's going to be a dump that some minority might see coming, majority will never see coming. I haven't had a proper look at the charts to essentially to come to that conclusion of if it's going to be this month or it's going to be next month. But quarter one is still where the broad thing is going to be happening. So either this month or next month, it's going to be happening. So if you're somebody that's essentially holding money on the sidelines, waiting for that dump to happen, trust me, you will be getting warnings from your notifications on your phone when that essentially does happen. But in the Telegram group, I'll put essentially a message of when I possibly think it's going to be happening, March essentially, or this month in February. Pocahontas needs to go. Facts. Let's go, JP. BTC will be 30,000 before it ever hits 100K again. It's coming from Anthony. It's an outcome, I've always said, considering one outcome inside of a very volatile 24/7 market space is quite, the simplest way to put it, quite ridiculous and stupid. So, considering multiple outcomes, sure, why not? Because if you consider multiple outcomes and one of those outcomes happen, you won't be surprised or shocked because you kind of saw it coming. That's why I always say, consider multiple outcomes. So, Anthony, if you're suggesting 30,000 essentially Bitcoin before essentially Bitcoin ever hitting 100,000 again, sure, we'll consider it as an outcome. Not the outcome, but we'll consider as an outcome. Why not? The same way we're going to consider Standard Chartered Bank's perspective as one outcome, not the outcome. Thinking of putting another 5,000 essentially pounds into my bag, just waiting for the fire sale when it comes. No problem, T. Let's go. Now, the Senate. The Senate's breakthrough regarding the Clarity Act is what we're going to talk about next on tonight's live. So, a major shift in US regulatory landscape occurred as a key Senate Democratic, essentially, reportedly Senate Banking Committee Chair Sherrod Brown, or a similarly high-ranking member, signaled a newfound willingness to move a comprehensive crypto market structure bill to the floor. Incredible. It seems like the crypto pack is working. This development follows months of legislative deadlocks and arrives just as the industry's yield wars with traditional banks reached a boiling point at the White House. So, the key legislative developments: the pivot to progress. The unnamed senator leader expressed that the status quo is no longer an option and called for the Senate to finally act on the FIT 21 bill, or essentially a mirrored version of the House passed market structure bill. The urgency is being driven by the fear that the US is losing its competitive edge to more proactive jurisdictions like Hong Kong and the UAE, which is true. A few nights ago on this live, I explained to everyone that Hong Kong and the UAE are pretty much headbutting each other on who gets there first in terms of crypto regulations. Hong Kong and the UAE are both aiming for the title of the crypto capital of the world. Something that was suggested by Donald Trump in his presidential run, that America should become the capital of cryptocurrencies, and it will become the capital of cryptocurrencies. Yet, since Donald Trump has made those essentially quotes, we've seen some progress without a doubt, honestly. The SEC turning pro crypto, getting rid of Gary Gensler, crypto cases dropping left, right, and center. The OCC becomes pro crypto, FDIC is pro crypto, CFTC is pro crypto, the White House is pro crypto in general. Trump's administration is completely pro crypto. Also, we're seeing banks becoming pro crypto. There's a lot of things happening that are pro crypto in the United States since Trump has taken power. But one of the most important things that we need to be passed is a Clarity Act, and that is still in some sort of a deadlock. And the one that was passed, the Genius Act, is being revisited because they're trying to remove yields. So I understand that the US is slipping behind when it comes to essentially legislations, yet in other stages, it isn't slipping behind in any sort of way. As I explained, every department in the US has become pro crypto, and the droppings of the case and getting rid of Gary Gensler. So, breaking the deadlock, this move is seen as a potential grand bargaining involving the Clarity Act, stablecoins, and broader market oversight. By signaling support, the Senate leader is effectively clearing the path for a vote that could provide the institutional grade clarity that firms like BlackRock and JP Morgan have been demanding. The SEC's chief danger of defeat warning. In a simultaneous, essentially, and highly charged appearance, the SEC chairman, Gary Gensler, or his successor, issued a stark warning to lawmakers, according to reports from Coindesk. The SEC's chief revealed that the agency faces a danger of defeat both in the courts and the halls of Congress if it does not adapt its enforcement heavy strategy. Losing the legal war, the SEC chief acknowledged that the recent court rulings have increasingly favored the industry's view on digital assets as non securities when traded on secondary markets. He warned that without a legislative mandate, the agency risks being stripped of its oversight authority by the judiciary. The legislative sideline essentially threat, the chief expressed concerns that if Congress passes a bill that leans too heavily towards CFTC, the SEC could permanently be sidelined from the most innovative sector of the digital economy, including DeFi and stablecoins. Now we know why the CFTC is going to be having more power over the crypto space. It's because how the SEC, when Gary Gensler was the chairman, treated the crypto space by suing them essentially relentlessly over everything essentially the crypto space did, and especially targeting Ripple on its by its ones and trying to essentially dismantle what Ripple did in every way possible. And it was just so obvious that the SEC and Gary Gensler were weaponized to go against Ripple in this battle, this long years of battle that they went through, which then Ripple became victorious at the end and even expanded worldwide while the battle was going on. So I fully understand why they're leaning more towards giving the CFTC more power, but we've also got to understand Gary Gensler is not there anymore, and the SEC is not anti-crypto; they're actually pro-crypto now. So I could also see where the new Fed, essentially the new chairman of the SEC, is coming from as well. So political pressure. Broader political context we're talking about now. The political pressure, this regulatory shift comes as essentially as we talked about regarding the 1.5 million campaign, essentially $1 million campaign to unseat anyone that's essentially against the crypto space. In this recommendation, it is green that's being targeted right now by the crypto space. Institutional urgency with Goldman Sachs revealing their $2.3 billion essentially portfolio, which we talked about essentially a few nights ago as well. It shows that institutions are getting ready to take more steps inside the crypto space, but are still being held behind because we don't have a Clarity Act. The potential alignment between the Senate leadership and a wary SEC suggests that the US may finally be approaching its MICA movement, essentially, which is what the EU has. A definitive regulatory framework that could unlock the $2 trillion in capital that the analysts believe is waiting on the sidelines. Everybody now inside the crypto space, whereas if it's CEOs or if it's actually CEOs of crypto companies or CEOs from the banking sector or institutional sector, everybody is talking about the $2 trillion, that 1% market space, that $2 trillion from the Asian market space that could be flooding in the crypto space. Just 1% of it, $2 trillion that could be flooding into the market space, not overnight, but over time, but that it can be flooding in the crypto space. But it can't because we don't have a Clarity Act. And they're saying we get a Clarity Act, we have a foundation, we can move forward. Not only will the essentially Western market space invest more inside the crypto space, but the Asian market space will get involved even heavier. Now, Consensus Hong Kong is what we're going to talk about next. The event that's going on right now is all about innovation in terms of blockchain and AI technology. And this is what essentially was said by one of the panelists, one of the CEOs essentially at the event. The stablecoin pivot and the defeat of the traditional banks. Today, the final days of the Consensus Hong Kong solidified a major theme for the year. The shift from speculative trading to stablecoin driven institutional utility. It's all about utility right now. Two major reports from Coindesk highlight a growing consensus that the battle for the future of payments has reached a turning point. Asian institutions pivot towards stablecoins. Industry experts at the conference at Hong Kong today noted that a massive streak shift among Asian financial powerhouses. While 2024 and 2025 focused on Bitcoin's ETFs, 2026 is being defined by the integration of stablecoins into real world trading and corporate treasuries. The yield gap. With the US dollar backed stablecoins offering competitive yields compared to traditional Asian bank deposits, family offices and regional treasuries are moving billions into tokenized cash equivalents. Cross border efficiency. Experts highlighted that Asian B2B trade is increasingly bypassing the SWIFT system in favor of stablecoins on networks like the XRP Ledger and Layer 00 blockchain, citing that the 24/7 nature of the chain, essentially banking advocated by Franklin Templeton and SWIFT. Just to repeat that one more time, this is essentially what's being mentioned at the Hong Kong event for pro innovation of crypto and AI technology and what the future holds. They said 2024 and 2025 was all about Bitcoin ETFs. They said 2026, which is the year we're in right now, is all about utility, cross-border payments, and tokenizations of stablecoins. And they said the projects that are running the show and that the Asian markets, just to point out this, and that the Asian market space is so heavily backing stablecoins rather than a Swift payment system. And they said that the stablecoin essentially sector is right now being carried by the XRP Ledger and Layer 0. Regulatory foundation or validation. The pivot is being accelerated by Hong Kong's new stablecoin licensing regime, which institutions view as a safe harbor compared to the ongoing yield wars and regulatory friction inside the United States. In other words, Hong Kong is getting so close to essentially passing those legislations that they have some already, and the licensing they're passing out, that they're so close to advancing to the next stage, while the US, in terms of Democrats and Republicans, still going head to head against each other on terms of passing crypto legislation, or the banks and the crypto CEOs still going head to head together to pass a crypto legislation. Whereas Hong Kong is smoothly essentially sailing past the US when it comes to crypto legislations. And that the Asian market space is heavily going towards stablecoins rather than a Swift payment system. Swift and Franklin Templeton together doing that payment system, whereas the XRP Ledger and Layer Zero are sailing past in the Asian market space. So, to add on top of that, Gate.io, the crypto exchange, CEO Lin Han said banks have lost the war against stablecoins. Banks have lost the war against stablecoins. In essentially one of the most talked about sessions of the entire Hong Kong summit in crypto and pro innovation things, Lin Han, the founder and the CEO of Gate.io, delivered a blunt assessment of the current financial landscape, declaring that traditional commercial banks have effectively lost their battle to suppress or replace stablecoins. The utility monopoly. Han argued that banks can no longer compete with the programmability and the velocity of stablecoins. He noted that even as central banks push for no privacy CBDCs, warned essentially by Ray Dalio, private stablecoins have already captured the network's effect and user trust required for global, essentially commerce, failed suppression. Han pointed out to the recent yield wars at the White House as a desperate last ditch effort by the banking lobby to protect their low yield deposit model. The genie is out of the bottle, Han stated. You cannot regulate away the demand for more efficient form of money. The new financial stack, according to Han, the future is not about banks versus crypto, but about which bank will survive by becoming service providers on top of stablecoin essentially rails. This sentiment echoes BlackRock's recent move to list its build fund on Uniswap, effectively turning a DEX into a primary banking interference. This is essentially what I've talked about for the longest time. I mean, I know the explanation or the metaphor that I used regarding the banks going up against the crypto CEOs right now in the United States, trying to survive in some sort of a way of keeping keeping the yields out of the Genius Act, and they don't want the average American earning any sort of yields on their stablecoins because then people will move their monies out of the banks, which means the banks won't have enough money to trade on because that's what they do on your money. And then if that happens, then they can't give out lending, borrowing services, which I understand from that perspective. But I explained it as if essentially crypto CEOs and bank CEOs are right now holding from their fingertips from a huge mountain. Think of it like this, Mount Everest, in other words, just a better explanation to give. Think of it as the banks are holding essentially from their fingertips from Mount Everest, trying to survive. And that the crypto CEOs are standing on top of the mountain, giving their hand out to the banks and saying, join us before you slip, is the best way to put it. That's exactly what's happening. Crypto CEOs are right, especially crypto CEOs of banks are right now slipping from their fingertips by holding onto that mountain, while the crypto CEOs are standing on top of the mountain, reaching out their arm and saying, "Join us." It goes back to that old saying of essentially of if you can't beat us, then join us. The tables have turned. So the 2026 macro picture. These developments bridge the gap between the optimistic and the cautious views currently held by Wall Street. While Standard Chartered warns of that near-term price correction of BTC, which we talked about for ETH, the plumbing of the financial system led by the Asian institutions and major exchanges like Gate.io is being permanently rebuilt. As BlackRock eyes that $2 trillion unlock in the region, the message from Hong Kong is very clear. The era of stablecoins as a fringe asset is over. They are now the cornerstone of the global digital economy. In other words, the banks right now against the crypto space in terms of stable coins and yields are wasting everybody's time. They're even wasting their own time. Because if America does, in some sort of a way, side with the banks, Hong Kong isn't going to side with the banks. They're going to side with the crypto companies. And therefore, stablecoins will advance more, and the crypto space will advance more in Hong Kong. Same goes for the UAE. They're siding with the crypto space rather than the banks. Same goes with Singapore. Same goes with Japan. And the list goes on. So it's just about, is America going to make the right decision and side with innovation, or once again, side with the opposition, which essentially is the same opposition that held America back during Biden's administration? So, Kathy Woods is what we're going to talk about next on tonight's live. Before we talk about Kathy Woods, let's go into the conversation first. Let's see what's happening there, and then we'll go straight into the conversation. And then we go straight into the next news on tonight's live. We have one comment so far on the new one. It's LinkedIn, and it says, "Hi, LinkedIn, how you doing?" Now, Kathy Woods, Bitcoin will thrive, aimed deflationary chaos created by AI. What's also being suggested is essentially that the AI market space is disrupting Bitcoin right now. So, how is AI disrupting Bitcoin? Well, Bitcoin mining companies are turning into AI data centers right now. And some went as far as changing their entire company name to become an AI data center. I mean, one of the biggest one was Bitmain. They completely changed their company name. They're a public company, changed their name, completely moved away from Bitcoin mining. So yes, AI is definitely disrupting Bitcoin's market space right now. But just to put in perspective, AI is not disrupting the entire crypto market space up to a certain extent. Let me explain why. Because technically, the entire crypto space still follows Bitcoin's footsteps because we don't have legislations, and when we don't have legislations, we don't have utility, and we don't have utility, we can't decouple from Bitcoin, and therefore we're just going up and down following Bitcoin's footsteps. We get regulations, we decouple from Bitcoin, XRP decouples, Solana decouples, AVAX decouples, ARB decouples, essentially the list goes on, you could say, pretty much XLM, XDC, HBRO, so on. And then it's just Bitcoin trying to defend itself, while every Bitcoin mining corporation is turning into an AI data center because that's more profitable. So yeah, I could definitely see why AI is disrupting Bitcoin's footsteps right now. So Kathy Woods doubled down on her bullish stance for Bitcoin and saying, sure, it is disrupting Bitcoin, but Bitcoin still has a future, is what Kathy Woods suggesting, arguing that the asset is uniquely positioned to thrive in the era of deflationary chaos, triggered by the rapid advancements of artificial intelligence and technological innovation. So she's saying essentially that, it's disrupting Bitcoin, but also, AI could help advance Bitcoin's technology. Speaking during an appearance on Coindesk TV, Wood essentially outlined a future where AI drastically lowers the cost of production across the global economy, leading to a period of structural deflation that could catch traditional central banks. I'll be very honest. The idea that essentially, leading to a period where of structural deflation that could catch traditional central banks off guard, and that AI could drastically lower the cost of essentially when it comes to the global economy. Yes, it definitely can, but you can also just use the XRP ledger if you want to do payments at a drastically lower cost. Bitcoin is way more expensive than the XRP ledger is. It's slower than the XRP ledger. So if you're just looking for an alternative for cheaper payments and faster payments worldwide, just use the XRP ledger. Why are you going to be waiting 10 to 5 years for AI technology to catch up and then lower the cost of payments and so on, when you could just use the XRP ledger now? It's cheaper, it's faster, it's more secure, and easier to scale. So this is her essentially argument, her key pillars of Wood's essentially thesis. AI has deflationary force. Wood noted that the convergence of AI, robotics, and energy storage is driving down costs at exponential rate. In this environment, she argues that traditional fiat currencies risk being devalued by governments trying to fight deflation with excessive money printing. I agree 100%. The amount of printing that's being done isn't actually helpful in any sort of a way for the hole that's just digging deeper in. And it's not just the US that's digging a deep hole every time they print. The EU prints as well. They dig a deeper hole. The UK keeps on printing. They're digging a deeper hole. The list goes on of all the countries that are printing. So, Bitcoin as the anti fiat, unlike traditional assets, Wood views Bitcoin as a neutral, global, digital, private, and non state currency. As AI driven productivity increases, she believes Bitcoin will serve as the ultimate hedge against resulting economic volatility and instability of the legacy financial plumbing. The zero blockchain catalyst. Wood's comments follow ARK Invest's recent backing of Layer Zero. Zero's blockchain. She noted that the move towards natively on-chain banking, as also advocated by Franklin Templeton and Swift, is the natural evolution of this innovative cycle, allowing capital to move at the speed of AI, she's calling it. Again, you could just use the XRP ledger and move at the speed of AI. It's faster and cheaper than Bitcoin by any means. I don't understand this argument that, let's wait 5 to 10 years for AI to advance so that Bitcoin becomes cheaper and faster. When you don't have to wait 5 to 10 years for Bitcoin to, get cheaper and faster, just use an alternative that is faster and cheaper, the XRP ledger. Price targets reaffirmed. Despite recent market jitters and the TradeFi driven sell offs that saw Bitcoin dip below $68,000, Wood stood by her long term base case price target of $1.5 essentially million per Bitcoin by 2030. She's still standing by her prediction, $1.5 million per Bitcoin by 2030, citing the massive institutional shift currently being led by BlackRock and JP Morgan. She also made one other argument, which was essentially that Bitcoin is this independent blockchain and that it has no links to any entities or any governments or any companies, which is a complete load of BS because we don't know which entity Bitcoin is actually linked to. There still is a founder behind Bitcoin that could be a person or a group of people, or according to the Epstein files, him and others around him. And the fact the founder of Bitcoin holds a tremendous amount of Bitcoin. The argument that all of the Bitcoin maxis always use, which is Bitcoin is independent, it's private, it's neutral, nobody has a hand or control of it. Are we always just gonna, look to the side on the topic of the founder of Bitcoin holds a tremendous amount of Bitcoin that could be used at any moment in time to dump on the market space and shatter economies across the globe? We saw a plunge inside the crypto space that, took out a few businesses, you could pretty much say, within a space of 48 hours. And that was nothing compared to what the founder of Bitcoin can do when he ever does wake up and dumps on the market space. Imagine every country has some sort of holding of Bitcoin. Imagine the US actually went forward and, essentially sold some of their gold, which was being suggested by Bitcoin maxis for the longest time. Bitcoin maxis suggested that America should buy a tremendous amount of Bitcoin and sell off their gold. Imagine if America did that. And what we experienced inside the market space, that 48-hour, 72-hour dump inside the market space. Imagine that what that could have possibly done to America's economy. Imagine what if the founder of Bitcoin dumps on the market space with the 1 million Bitcoins he has, 1.1 million Bitcoins that he has. Imagine he dumps on the market space at a time where America is holding a tremendous amount of Bitcoin. The US, essentially Canada is holding Bitcoin. The EU is holding Bitcoin. The Asian market space, the Middle Eastern market space. Imagine every country has a supply of Bitcoin and they sold their gold to buy Bitcoin. And then the founder of Bitcoin chooses that one particular day to dump on the market space. 1.1 million Bitcoins on the market space dumped. Imagine the chaos that could cause around the globe. It could crash markets, crash economies. People will lose their homes, people will lose their jobs. That's the type of chaos they don't want to share with you for some oddly reason. They want to show you the good side of Bitcoin, but not the reality of it, where down the line, things can go really bad if they're not calculated correctly. Whereas you could just go for a different asset where you know who the founders are, you know the company behind it, you know what they're trying to achieve, you know that they're essentially a private company, but transparent, you know their contracts, you know their licensing. Why not go for a safer alternative route rather than who's the mystery person that could one day ruin the world's economy? Just a perspective to keep in mind. Wood's outlook aligns with the broader theme of the utility era, emerging in early 2026. While Joe Lubin recently claimed Bitcoin is in the narrative crisis, Wood argues the opposite, that Bitcoin's narrative is becoming clearer than as the essentially tectonic shift in essentially productivity makes scarcity more valuable. True up to a certain extent. As BlackRock executives, again, are still looking to that $2 trillion unlock in the Asian market space, and Goldman Sachs essentially increasing its crypto exposure, Wood's deflationary hedge argument provides a macro framework for why institutional giants are moving from speculation to long term hold, essentially accumulation in terms of reserve assets. But honestly, I just wanted to share that with you that, you know, if every country stockpiled on Bitcoin and sold their gold, imagine the chaos that could erupt when the founder of Bitcoin, or the group behind Bitcoin, or the CIA operation behind Bitcoin, as Will Smith suggested for the longest time inside the crypto space as well, or whoever it may be, decides one day to wake up and dump because they're holding 1.1 million Bitcoin. And every country sold their gold to buy Bitcoin. Imagine the chaos that could erupt just by that man selling, or that group selling. And we don't even know who he is or which group he is because we can't even sue them. See, the reason why companies like, for example, Ripple, who hold a substantial amount of XRP and have been criticized for holding XRP essentially in their reserves, and they're being criticized by that. But here's the thing, Ripple can't just dump it on the market space because they'll be sued. And that's the difference. The difference is if a company like Ripple, who holds quite a bit of XRP, just dumps it on the market space one day, they would be looked into, they would be sued, and they'll probably pay a heavy penalty, and the leaders of Ripple could even end up in prison. But who's going to put the founder of Bitcoin in prison when he decides to dump on the market space? Nobody, because we don't know who he is. And that's a huge risk to think about. One side, if they did anything like that, could be sued. And they know that. They could be sued, pay a massive penalty, and also essentially even end up in prison. While as the other side is a mystery man or a woman or a group who could do whatever they want, whenever they want, and get away with it. Now, moving on from Cathy Wood's argument that wait 5 to 10 years, Bitcoin will finally catch up to becoming cheaper. Well, you could just use the XRP ledger. It's already cheaper and faster. You don't need to wait 5 to 10 years. To the UK government is what we could talk about next on tonight's live. So, the UK government, if ever you have heard it or haven't heard it, has just appointed HSBC to lead a landmark digital guild, blockchain bond pilot. Now, HSBC is a bank that has become quite pro crypto over the years. At first, they were a bit, iffy. They invested into crypto but didn't let their users and the bank invest into crypto, which was a very odd move to do in the first place. But that's only because they didn't want to cause a bank run with HSBC. But putting that to one side, HSBC has actually been appointed by the HM Treasury officially as one of the banks leading essentially the United Kingdom into this crypto space. So HSBC to essentially spearhead a pilot program for the issuance of tokenized sovereign bonds, commonly known as digital gilts, according to reports from CoinDesk. This move represents essentially the UK's most significant step towards fulfilling its ambition to become a global hub for digital asset technology under its natively on-chain financial roadmap. So here are the key details essentially of the pilot. Institutional partnership. HSBC, one of the world's largest banking and financial services organizations, will provide the underlying infrastructure for the essentially issuance and trading and settlement of essentially those digital bonds. This follows HSBC's successful launch of the HSBC Orion, its own essentially tokenization platform. T plus zero settlements. The primary goal of the pilot is to demonstrate instant T plus zero settlements for government debt. This won't eliminate essentially standard 2-day delay currently found in the gilt market, significantly increases capital efficiency for institutional holders. Interoperability focus. In alignment with the views recently expressed by Swift and Franklin Templeton, the pilot will explore how these digital gilts can interact with other on chain assets, such as regulated stablecoins and potentially the digital CBDCs. The part of the utility era. The announcement concedes with a flurry of global institutional activity, including essentially Aviva investors and partnerships of Ripple and blockchain and integrations of this build fund with Uniswap. The UK's digital gate pilot is seen as a sovereign layer of this emerging tokenized economy. Competition with the EU and the Asian market space. The UK is racing to keep pace with the European essentially Union's DLT pilot regime and Hong Kong's aggressive push into digital assets. By tokenizing its own sovereign debt, the UK aims to attract global liquidity and essentially prove that the City of London remains at the forefront of financial innovation. Good that they're finally starting to realize that the City of London is slipping from the title of the capital of money. As I explained a long time ago, Washington, D.C., the capital of politics, City of London, the capital of money, and the Vatican, the capital of religion. So, validation of DLT. The appointment of traditional powerhouses like HSBC to manage a sovereign debt pilot is a major validation for distributed ledger technology. It signals that even the most essentially conservative parts of the global financial system and sovereign debt markets are preparing for a permanent move on chain. This move comes as JP Morgan and BlackRock predict massive institutional inflows for the remainder of 2026. And also, while Standard Chartered Bank, as we explained, essentially is telling everyone of that short-term possible play in quarter one, but going through, it's all going to be good. So, just to put in perspective, HSBC is also a Ripple partner, and they've just been approved by the United Kingdom for their gilt. This is the UK's first step into tokenization. You could pretty much say it's a big step for the United Kingdom, as a big step for the City of London. Extremely positive. Now, moving away from the United Kingdom, and let's talk about BRICS, something we haven't talked about in a while. So, Russia and India are doing two major things, and they're both one of the key players inside of BRICS. Here's Russia. So, global CBDC shift is happening right now. Russia eyes BRICS dominance while India mandates reporting. In two major developments today, the global landscape for central bank digital currencies, CBDCs, has shifted towards international trade and domestic tax enforcements. Russia's strict pivot, digital ruble for BRICS trade. Russia has announced today a significant shift in its digital currency strategy, reinforcing the digital ruble primarily as a tool for international trade settlements with BRICS nations. Target launch. The Bank of Russia is targeting September 1st, 2000 essentially 2025, with the recent updates pushing the pilots into early 2026. So quarter one, quarter two, we could be expecting essentially a Russian ruble. Quarter one, quarter two, quarter three, we could be expecting a Russian ruble. Now the program did start on September 1st, 2025, which when I in 2025, September 1st, I revealed this news first. But you fast forward to 2026. Now, quarter two, quarter three, we should be expecting essentially a Russian ruble. So, bypassing SWIFT. The primary goal is to create a sanction resistant payment system independent of Western financial infrastructure, which is what SWIFT does. Unfortunately, it's going to fail because no country, and you could just say it, in the simplest way, every country is starting to come to the conclusion that being controlled by SWIFT's payment system that could one day sanction their country's payment system, which will cripple their economy overnight, is not a good thing. Hence why countries that are being sanctioned and countries that, essentially aren't sanctioned at all are all looking for alternatives to SWIFT. So this is why I said no matter how hard SWIFT tries and partners with as many blockchain companies as it wants, it's just not what it used to be. And that every country is making the intelligent choice to move away from SWIFT and create their own underlying payment system so that they can't be sanctioned one day and cripple their economy. So, bypassing SWIFT. The primary goal is to create a sanction-resistant payment system independent of Western financial infrastructure. Timur, the chairman of the Russian Financial Market Security Committee, admitted that domestic demand for the CBDC is low among citizens, and that banks effectively making the digital ruble an international project from its inception. BRICS' coordination. The initiative aims to harmonize with other BRICS projects such as the Chinese digital yuan, India's digital rupee, and Brazil's digital CBDC, which is called DREX, to settle trades in commodities like oil and grain directly between central banks. So that's on Russia's side. So Russia CBDC is getting into the next stage. We should be expecting a Russia CBDC this year, quarter two, quarter three. Expect a Russian CBDC, or even in the quarter one, and that more countries are moving away from SWIFT. And no matter what SWIFT does to become faster or cheaper, it's still a political tool. Whereas, the XRP ledger isn't a political tool. So India is now what we're going to talk about, another BRICS nation. India is doing something quite interesting when it comes to CBDCs that could be replicated essentially around the world, or I wouldn't say could, it is going to be replicated around the world, which is this. The Central Board of Direct essentially Taxes, CBDT, in India has released draft rules for the incoming Tax Act 2025, which will essentially come into effect April 1st, 2026. The new rules aim to formalize the digital economy within the tax framework. Mandatory essentially crypto reporting for the first essentially time. Crypto exchanges will be legally required to share comprehensive user transaction data with the tax department to ensure compliance. In other words, crypto companies sharing information with the Indian government, which is something that's going to be happening worldwide. So what's the other interesting or unique part about this? Well, it's this part: CBDC integration. The draft rules officially include the CBDC, central bank digital currencies, as an accepted mode of electronic payment for tax purposes and other formal transactions. India is now accepting their own CBDC for tax purposes. So anybody that essentially wants to pay off their crypto taxes in India can be using their CBDCs, their Indian CBDCs. Indian CBDC can be used to pay off crypto taxes. The threshold adjustment. The rules propose raising the threshold essentially for quoting a permanent account number, PAN, in other words, for cash transactions, and essentially example, deposits and withdrawals over 10 lakh annually. The better capture relevant information while essentially leveraging technological enhancements, urban expansion. The list of Category 1 metropolitan cities for HRA house rent allowance has been expanded to include essentially other cities in India that also will be going under this CBDC rule, where taxes will be paid in CBDCs and crypto taxes will also be paid in CBDCs, Indian CBDCs, the digital essentially rupees. Now, so the 2026 macro context. These moves underscore essentially an approach to digital currencies in 2026. Geopolitical weaponization. Russia and BRICS are using CBDCs to challenge the US dollar dominance in global trade. Regulatory integration. India is moving to essentially cleaning up the digital asset space by integrating crypto and CBDCs into a national tax reporting system. This aligns with warnings from Ray Dalio, who recently noted that the no privacy CBDCs would eventually become the norm as governments seek total transparency in financial flows. As BlackRock and JP Morgan continue to drive institutional capital into the space, these state led digital infrastructures are setting the stage for the next decade of global finance. If you want to pay your crypto tax off, you have to be doing it in CBDCs. Essentially, is what's being suggested right now in India. Is this something that's going to be replicated in the UAE, in the UK, in the EU, in the US, in Hong Kong, in Singapore, in Japan, Australia? Most likely, yes. Where you're going to be paying your crypto taxes off and using your country's CBDC. Now, that's why I wanted to share that with you, just in case, a heads up of what's to come. And they're saying it's the next decade of the global financial system, in other words, going forward. Moving on from that to Ripple and XRP news. Before we talk about Ripple and XRP, let's go inside the comment section first. Let's see what's happening there, and then we go straight into the next news on tonight's live. So let's see. As I said previously, this is live, which means if you do have any questions, go for inside the comment section. The banks have taken so much from the people already, including the whole fractional reserves essentially situation. Like, stop it already. I agree with essentially Ray 100%, especially regarding the fractional reserves, which is the most stupidest thing that banks were able to get away with. Good evening, Miles and CMF, Bull XRP. Good to see you. How you doing? Hey, family. I'm sorry I'm late. Scott, no problem. Good to see you. How you doing? Now, Morgan Creek Capital CEO Mark Yusick. XRP could be ordered for use in CBDCs or national banking. So, just as we were talking about CBDCs, Morgan Creek Capital CEO Mark is suggesting that XRP could be ordered to be essentially the backbone of CBDCs, could be ordered for the backbone of CBDCs or national banking. Mark W. Yusick, the CEO and Chief Investment Officer of Morgan Creek Capital Management, made headlines after a video surfaced where he discussed a potential legislative pivot that could position XRP as a foundational component of the national financial infrastructure. So here are the key insights from Mark's essentially speech. Beyond Bitcoin. While Mark essentially is well known for being a Bitcoin maxi, he acknowledged that current policy discussions in Washington are expanding to include other major digital assets like XRP, ADA, and HBAR. The mandate utility theory. In a striking comment that resonated throughout the XRP community, Mark noted essentially that there is some talks that XRP could be utilized or ordered to be used for a central bank digital currency CBDC or the base layer for a national banking. The Eric essentially influencer, Mark, referenced the specific high level engagements, hinting essentially that the administration's strategy may be influenced by essentially Eric, the son of the major political figure, who is reportedly driving a lot of this. A strict pivot. While Mark clarified essentially he wasn't certain this would happen, he emphasized that if XRP were to be adopted as a national banking base layer, it would change things entirely for the global financial landscape. So why does this matter in 2026, which is known to be now the utility era? Mark's comments align with a series of high-profile developments that occurred during the same week in February 2026. One of them, the Aviva Ripple deal. Aviva investors recently partnered with Ripple to tokenize essentially funds on the XRP ledger, proving the chain's production grade readiness, which essentially we just talked about a few nights ago, Aviva and Ripple. The second thing, the UK's Digital Guild, the UK government appointing HSBC to pilot a blockchain based bond, reinforcing the trend of sovereign debt moving on chain, which HSBC also has a partnership with Ripple. BRICS and CBDCs. As Russia accelerates its digital route for BRICS trade, the idea of Western nations adopting an existing highly liquid rail like the XRP ledger for their own national banking based layer is seen by some as a strict countermove because you can't get sanctioned on the XRP ledger. So, market reaction. The XRP army and the broader institutional observers have highlighted Mark's remarks as a sign of elite level breadcrumbs. If prominent Bitcoin advocates like Mark is acknowledging the potential for XRP to be essentially ordered into service by national banks, it suggests that the asset's role has evolved far beyond simple cross border remittances into critical piece of global economics. Plumbing. As BlackRock and JP Morgan continue to push for institutionalization flows and tokenization, Mark's speculation adds weight to the theory that the next phase of digital asset markets will be driven by mandated utility and the integration of sovereign finance into public and private blockchain rails. I'll be very honest. The moment we get a Clarity Act, the moment essentially we get the Clarity Act passed, within weeks or months, you're going to see something special happen inside the crypto space where projects that have genuine utility and licensing, you're going to be seeing sparks happening inside the crypto sector. Not overnight, within weeks or months, you're going to be seeing sparks inside the crypto space when the Clarity Act is passed. And you might see straight away market reaction. Clarity Act passed, crypto space is happy, it's fireworks, everything goes up, but it wouldn't be able to sustain it because that's just the excitement inside the market space that's keeping the market up. It will come back down. And that's one outcome. Second outcome, Clarity Act passes, market goes down. Everybody's like, what the hell? I thought the Clarity Act was going to make the market do fireworks. And that's outcome number two. But they both have the same ending, which is the projects that have clarity and both outcomes, one or two, will eventually pick up due to the licensings, due to the years of background work on the sidelines in terms of development and essentially the spendings they did, or Ripple acquiring billion-dollar organizations to push the XRP ledger even forward. So that's essentially what's going to be happening. and that we might see the day where Bitcoin starts to slip. Because what utility does Bitcoin bring towards the table except limited supply? Many have tried to create essentially versions of Bitcoin. I don't mean a separate blockchain. I mean trying to upgrade Bitcoin in some sort of way. They tried to do NFT Bitcoins. It failed miserably. It congested the network. Many tried to make Bitcoin faster with Lightning payments. That also failed in some sort of a way. I'll be very honest. The moment we go into utility, the crypto space is going to split up. And one group is going to be genuine utility, while the other group is going to be bluff. And let's just see where crypto projects land. Will the projects that you think land in genuine utility when the Clarity Act passes, or will it land in bluff? And bluff is pretty much, they've been bluffing all these years that they have something to bring towards the table. And in all reality, they had nothing to bring towards the table. I can tell you for a fact, in my own opinion, the XRP ledger is going to be in the group of real, genuine utility. And a few other ones I can name as well. XLM, HBAR, AVAX, Solana, and Ethereum has something to bring to the table as well. There's a few more as well I can also name, Ondo is a brilliant project as well, but let's just see who ends in what category, bluff or genuine utility after a Clarity Act. On that note, we have reached the endings of tonight's live. This was the CMF live show. This is CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulations. Disclaimer of this live show, as always, not financial advice, not political advice, and whatever I say, only for entertainment purposes. This was episode 440 of the CMF live show. Episode 441 tomorrow. Like, comment, share, follow, subscribe if you already haven't. If you have, thank you so much. Click the three dots at the top. Click share to profile if you want to share this essentially, this live show to everyone online on X so that they also have a better idea. And also, if you don't know, or if you do know, I have launched a Substack that anybody could go essentially and view and read articles that I write. I'm going to be writing many articles on Substacks, articles that sometimes I cover on this live show and that I don't cover on this live show. And at the end of each article, I will be sharing you my perspective. In other words, the Miles Nadimian perspective at the end of the article. So it's a unique concept that I'm starting. Every time you go to read a crypto article, it's just the crypto article and that's it. When I write an article, it's going to be the news article and underneath will be my perspective on the article. Go and check it out if you already haven't. I've pinned it to my profile on X. It's the first thing you will see on X, which is my Substack. Go and subscribe to it if you already haven't. Same rate tomorrow, same time as usual, 10 p.m., long time onwards. Before we do go, let's go to the comment section first. That's what's happening there, and then we will call it a night. The banks have taken. What do we hear? Night Miles is CMF. Amazing show as always. Let's go, Joe. See you tomorrow, same time as usual. Great live, Miles. Thank you. Good night, Miles and CMF. Jason, see you tomorrow, same time as usual as well. Thanks for another great evening, Miles, and I will see you tomorrow again. Let's go, Addy. See you tomorrow, same time as usual. Take care, Miles and CMF. Ray, see you tomorrow, same time as usual as well. Thanks again, Miles. Much appreciated. Great live. Let's go, Comatose. See you tomorrow, same time as usual. Exciting news. Thank you so much, Miles. Have a lovely night all. Let's go, Lena. See you tomorrow, same time as usual as well. Good night, Miles and all CMF. Thank you for a great live and news. Let's go, JP. See you tomorrow, same time as usual as well. Much. Lena, see you tomorrow, same time as usual. Thanks for your insights, Miles. See you all tomorrow, CMF. And I like the perspective on the article ID, Miles. Let's go, Shelly. Thank you so much. Good night, Miles. And great show. Thanks. And can't make it tomorrow, but see you Monday. See you Monday, free and forever. No problem. See you tomorrow. See you on Monday, same time as usual. Good night, Miles. Thanks. Let's go, Cali. See you tomorrow, same time as usual. I will see all of you tomorrow, same time as usual, 10 p.m. London time onwards. Everybody have a great day or a good night, depending on where you are around the world. See you tomorrow, same time as usual. Love you all.